Hi, and welcome to this edition of Charting the Markets with myself, Richard Snow from Daily FX. It is, of course, the 9th of August, and today we don't really have too much on the economic calendar as everybody looks ahead, of course, to tomorrow's rather influential US CPI print. We also had UK GDP data out on Friday. That's for the second quarter, of course. But as of today, we had some inflation data out of China. And while the rest of the world is grappling with inflation still remaining at elevated levels, China is struggling with a deflation problem where prices are actually moving lower, whereas in the rest of the world, we're seeing prices increasing at a decreasing rate. So something for the Chinese authorities to take a close look at, and markets potentially looking for further stimulus from the authorities there. We'll get into the charts in just a second. We also had some clarification from Italy after they announced a windfall tax on banks, which is to be capped at 0.1% of banks' total assets. So that could provide a little bit more stability to your European indices and particularly your banking stocks heading into this morning's trade. That's after yesterday where we saw quite significant declines, particularly in your Italian banking stocks. Now, sticking with banking, Moody's also downgraded a number of small and mid-sized banks in the US, signaling that some larger banks could also potentially come into focus in the near future. So this essentially just feeds into that risk sentiment that we've seen playing out recently. So if we take a look at the charts, we'll start with the FX markets, where we are looking at dollar yuan, this offshore yuan, where we've seen the dollar picking up strength with the chart moving towards the prior swing high. But first, looking at levels around 7.257. The dollar obviously seeing quite a lift, and that was even before the recent FOMC rate decision, and your FX markets continuing to trade in line with that recent bullish move. So markets are expecting we could be seeing some further weakening of the Chinese yuan, if that's in essence the sort of easing that they will be putting forward into the market. We'll need to wait and see from officials where they set those currency targets. But nevertheless, in this particular market, we're seeing a move today, a little bit lower, slightly lower, but that recent bullish advance looking at upside resistance at 7.257 with a intraday sort of support level, if you like, if we are to see a pullback down just beneath 7.2 in this particular market, trading substantially above the 200 SMA there. So again, that meaning that if we are to see pullbacks in the short term, we'll be looking to see where those start to flatten out, and we could potentially see a further upside there. Now, staying in Asia, we're taking a look at AUD USD or Aussie US dollar, where the decline has been quite obvious on the charts, of course. We had the Reserve Bank of Australia deciding to keep rates on hold once again, and we've seen price action then moving significantly below this 200 SMA. And previously we mentioned that we've been seeing price action oscillating around that 200 SMA, making trend trading fairly tricky, particularly those with sort of longer term outlooks. But we have seen that sell-off really pick up, not just this week from yesterday, but prior trading sessions before that, where we've seen prices approach the end of May swing low, not quite getting there. We've seen price action putting in a bit more of a fight here to the upside, where we are looking at 0.6580 as the next level of resistance if we are to see some sort of pullback to this sort of medium term sell-off that we've been seeing in the Aussie, particularly on the back of the RBA, which has signaled its intention to hold rates where they are at the moment. But it begs the question whether or not we have moved a little bit too far too quickly. Of course, the RSI not actually dipping into oversold territories. That is something we continue to watch. The MACD signaling that the momentum still favors the downside. And of course, because we are beneath that 200 SMA, that is possibly a further indication of Aussie dollar weakness. But nevertheless, price action signaling here that we could be seeing a slowdown in that bearish momentum. And therefore, we would need to assess the possibility of a potential pullback here, possibly another move back towards the 200 SMA. We get the RBA minutes next week, so that's something we'll have to focus on then. But for now, the Aussie dollar somewhat stabilizing or consolidating at the very least after yesterday's sell-off. Now, if we take a quick look at a cable, this is going to be a very relevant pair heading into the end of the week. As I mentioned, we have that US inflation print tomorrow, also UK GDP on Friday. Now, this has been quite an interesting one to watch from a breakdown perspective. This trendline support being held in play. We've seen multiple touches, although recently we've seen that come under pressure. Price action breaking, closing on the daily beneath trendline support and pushing even further. But more recent price action has seen a retest of this trendline prior support, which is now trendline resistance. So from a breakout perspective, you typically tend to see moves beneath the trend line, a subsequent retest. And if we are to see further selling after respecting the trend line, well, that would certainly suggest that we could be seeing more selling in cable going forward. Market rate expectations, interest rate expectations, I should say, are still fairly elevated for the Bank of England. Markets are anticipating we'll see rates around about 5.7%. And given the fact that we have been seeing interest rates move down towards that 25 basis point mark, that could mean that this prior boost that we've seen for sterling could be coming under pressure here, particularly as the dollar remains firm, it must be said, in light of encouraging fundamental data in the US. So we're looking here for potential respect of this trend line and a move towards the downside. Of course, a lot has to do with that CPI print tomorrow. If we see CPI coming down, then we could be seeing some further easing in the dollar, which would make this breakdown scenario a little bit more complicated. But for the moment, keeping our targets fixed on that trend line. And if we get a move lower subsequently, which would bring into focus one spot 2676, as well as one spot 2585, if we are to see more of a sell-off from here. But once again, that 200 SMA still very much beneath price action at current levels. So hence why we'd need to watch this quite closely as it develops. Now, looking ahead to your indices, we'll start off once again in the Asian. Actually, we're going to begin with the SPX. It must be said with the US market now reaching quite an interesting level on the trend line. We've been seeing a risk-off mood sort of grip the market, not just in the US, but the overall indices market ever since we saw that downgrade from Fitch, and not really seeing a massive sell-off or any sort of capitulation. But when we're talking about your US indices, pullbacks have proven to be fairly light, and that's just been testament to the strong bullish trend that has been playing out. At the moment, we're seeing more of a pullback. This is where we see a test of this trend line support. Also around about levels where we saw that mid-June swing high, and we also saw that level coming into play right at the beginning of July. That's around 44.50. So the indices really going to be tested around these levels. We're seeing a lot of interest around credit markets. We obviously had an indication from the Fed that institutions are less willing to advance credit, being a bit more conservative. We're also seeing lower demand for credit. And then yesterday we had some startling information that US credit cards debt has surpassed $1 trillion in value. So if you're focused on credit markets and some of the signals coming our way from credit markets in particular, that could be quite worrying. But as we've mentioned before, when looking at the charts, we need to stay fixed on current trends until we see otherwise. And at the moment, we've just seen a touch of that trend line. Immediate pullback. This is, of course, yesterday's data. We'll wait for how the market will open in the US later today. But as things stand, that pullback continues, but we're not seeing a sell-off extending further from there. Levels to watch 44.50, and to the upside, we're looking at 45.78. Looking at the DAX, of course, European indices in focus yesterday around that announcement, that rather surprising announcement from the Italian government that there will be a windfall tax on banks. Banks obviously increasing their net interest income at a time when rising interest rates have led to higher costs to borrowing for consumers, but those benefits of higher rates not necessarily passing on via the way of increasing deposit interest rates. So in essence, the government stepping in to create that tax. And across Europe, we saw that selling take place. Although this is the German index, it still wasn't spared there. We've now seen price action continuing to move down to this crucial zone of support around 15,660. But today trading higher once again. So price action appearing to approach that level once again. And we're now seeing a little bit more optimism, particularly as we got that clarification out of Italy that total assets of the banks are at 0.1%. We won't be seeing taxes going more than that. So looking at DAX, if we are to see further upside from here, 16,000, just above 16,000, that remains the tripwire. If we are to see a return to the recent all-time high, but if not, if we see a reversal round about those levels, once again, we'd be looking at 15,660 to the downside. But your 200 SMA coming in beneath price action, supporting a more bullish trend. But as you can see, the more medium-term outlook is one where we've been seeing consolidation. So perhaps looking at range trading opportunities in the DAX going forward. And looking at your Euro stocks, the top European stocks by market capitalization, we had an interesting development not too long ago. I call it an evening star-like pattern. It doesn't strictly fit the definition of an evening star, but what it does do, or it had signaled the potential for a move lower here as we reached those highs at 44.93, where we saw the emergence of what is essentially a doji candle, before that selling moving the index significantly lower. Of course, yesterday, quite a volatile day, seeing that move lower. Today, more of a recovery, as I mentioned, with a little bit more clarity. We're seeing European indices edge a little bit higher, but much like the DAX, we're seeing periods of extended consolidation here. So once again, we're looking at the levels and levels above the 200 SMA. So potentially looking at another move towards 44.15 if we are to see bullish price action picking up there. Now, if we take a quick look at our commodities markets and how we're shaping up there, we can start with the copper market. Of course, with a lot of the focus on Asia, and also in terms of your global economic activity, we tend to have quite a focus on copper. And now we'll see here that, again, we've been seeing price action oscillating above and below the 200 SMA. But more recently, we've seen what appears to be a breakdown, and that just really underlying the situation as far as global demand is concerned and the commodity outlook in general. So looking at copper, a move towards your swing low, perhaps 36.810, and potentially the prior swing low at the end of May, 35.40. Now looking at Brent crude prices, we've also seen a bit of consolidation around prior highs in the oil market. We've been seeing quite a lot of volatility yesterday. That is quite unsurprising there. Once again, we're seeing price action stabilizing around $87 a barrel there. We remain above the 200 SMA and looking at 82 to possibly underpin any sort of extended pullback at the moment, that being quite an interesting level considering it coincides with the 200 SMA. So if we are to see further move lower, then that is where the line in the sand can be drawn. Of course, we had news from Saudi Arabia that they intend to continue their voluntary 1 million barrels per day of supply cuts heading into September. So that is something to keep supply restricted. And with a tight oil market, we see oil prices remaining fairly high on the back of that. Now, looking at the MACD indicator, we were looking for potential bearish crossover. That's something that hasn't quite materialized. Obviously, looking at that massive pullback yesterday to end the day higher, that suggests that we do see more bullish momentum, bullish tenacity, if you like, that certainly keeping oil prices elevated at the moment. So we look to $87 there, the prior level of resistance that has come into play quite a few times in the past. 82 if we are to see an extended pullback down towards that 200 SMA. Now looking at gold, if we take a look at the recent sort of breakdown that we've been seeing following this ascending channel, we see gold today a little bit of a move higher, but generally we've been seeing lower price action from gold, and that once again highlighting 1915 to the downside potentially, and thereafter we see that 200 SMA coming into play, which hasn't really featured for a lot of this trading year, as gold prices have been rather elevated, and then more recently we've seen periods of consolidation, but at the moment we're seeing gold prices heading lower. Today, of course, we're seeing a little bit of a bullish move, but that could see gains being capped around about 1937 if we are to see an extension there. That, of course, coinciding with the underside of this prior period of consolidation. So 1937 on the upside, 1915 if we are to see a continuation of the bearish move from here. Well, that about does it for today. A fairly light day on the economic calendar front, but certainly a lot going on in the markets to keep our eye on. All the best trading out there.